Okay. All right. So with the trade signal, once again, the orange line crosses the blue line right here. We're going to enter the trade 10 ticks above the high. Stop loss is going to be 10 ticks below the 2-day low. Difference between the entry price and the stop loss price is 257 ticks. At 62.5 cents per tick times 257 ticks, that comes out to $160.62 on if I take a full loss on one contract. Okay? If I take a full loss on one contract, I will lose $160.62. We're going to have a profit objective of 50% of the difference between the entry and the stop loss. Okay? What is 50% of 257? How many ticks is that? Stop loss is 50% of 257. So what's 50% of 257? 128. So stop. Uh, Let me change that word. The target is 50%. Okay, not the stop loss. The first target is 50% of 257 equals 128 ticks. So not stop loss, but the first target is 50% of 257 is 128 ticks. So if I hit the first target, what will that be in dollars and cents? What's 128 times 62.5 cents? At first target we make. So what's 128 times 62.5 cents? 80.31. Okay, that's a 50% return at the first target. That means at our first profit target, we get a 50% return on our risk. That's the first target. That's where we capture profits. If you want more, then you have to trail stops, take part of the position off, trail stops, that type of thing. If you want more than 50%. Okay. This is how we place our trades. We find the opportunity. So we find the opportunity. Hey, the two lines crossed. We have a visual setup and we trade a group of strategies, not just one strategy. We have at least 10 or more strategies we trade as a group for long side and short side. This is one of the long strategies for a trending market. And we have our entry. We have our stop loss. We determine our risk in ticks and in dollars and cents for one contract. And then we have our profit objective. If we know our risk on one contract, as we calculated earlier, our risk was $160.62. If we wanted to risk $1,000 per trade, how many contracts could we get? So we would take $1,000 and divide it by 160.62. So 1,000, 160.62 equals. So what's 1,000 divided by 160.62? 1,000 divided by 160.62 is what? 1,000 divided by 160.62. Type it in. 1,000 divided by 160.62, 6.22 equals 6.22 or 6 contracts. So if we want to risk $1,000 on this trade, we would buy six contracts. And that would it's never exactly 1,000. It's always going to be that neighborhood. If you're going to risk 500, we might be getting two or maybe three contracts. Okay. It's going to be around 500. If you're risking 500, it's going to be around that amount. If you're risking $2,000 per trade, you'd be getting 12 contracts, or you can get one full-size contract and two micros. Same type of thing, except you save a few dollars on fees. So this is how we can control our risk. If we only wanted to risk $200 per trade, we get one contract. Okay. So this is how we control our risk. So we never ever take up any big losses. And this is something we learn along the way after we started surrounding ourselves with people who actually trade their own real money. You establish a certain dollar amount that you're willing to risk per trade, which will be a percentage of your account. For the futures, it's usually between 2 and 4% of account. That works pretty well. You might want to start out smaller even. If you're just learning, it might even be a smaller percentage. But we can really control the numbers here. So let me give you a little overall big picture of how we trade this and we can predict our income. Our average, let's say we risk $1,000 a trade, $1,000 a trade. If you want to write it down, make a note, that's all great. $1,000 a trade, and we average about 85% winning trades realistically. We only take trades over 80% wins historically since 2003. And we average about 85% wins realistically. So that means for every 20 trades we take, we will have three losses. On every 20 trades, we will lose $3,000. On the other 17 trades, we will make an average of 400. That's a 40% return. Some trades you will make less, some trades you make more, but we average a 40% return at the first target. We can make more money, but you have to do more work and trail stops, so on and so forth. I'm just talking about all in, all out at the first target. That means we place 20 trades, you're going to lose $3,000. On the other 17 trades, we average plus 400. That's minus 3,000. And for 17 times 400, that's $6,800, somewhere there. Yeah, so it's minus 3,000 plus 6,800 with a net of plus $3,800 profit. That's how we trade. Doing it like that, we have room for error. Let's say you make a mistake, things don't go as planned. You take an extra $1,000 loss, and you have an extra loss. Your percentage is down to maybe 82%, 83%. You're still making money. You take an extra loss, you're down to 80% wins. You're still making money. But it all relies on following the rules and try not to make mistakes that just kills you right away. And because it cuts down from your annual returns. And we're going to go through some trades in a moment to see there's a fine line between making money and losing money in trading, especially with futures, because we make money really, really fast, but we can also lose it fast if we mess up and don't stay disciplined. I love trading futures because it's predictable income. Okay. So we went through entry, target, stop loss, determination of risk, and we make the same basic calculations on every trade we do. And this setup happens over and over again. This is for basically a trending market. Orange line cross. This is a downtrending market. This is not for this trade here because this moving average is heading down. So this line crossing here would not be a valid trade signal for this market. For this one would not be valid. It's going the wrong way. We're looking for this moving average to be increasing from the previous day. Here's a beautiful trade. It's a trending trade. And, and this setup is for a trending market. Crossover, trade. Good. Trending market, crossover, trade, buy stop. And when we put our trade in, this crossover, it's actually increasing right here. So crossover, good trade. Okay. And what we do, we fill out an order form. So after this day is over, At our crossover, after this day is over, we put in our entry price, target, and stop loss at a number of contracts and walk away. The order has 2 days to be filled. If it's not filled within 2 or 3 days, then you cancel the order. But there's nothing else to do. You put in an order, GTC good till canceled. If it's not filled in 2 days, we cancel the order and it's done. Move on to the next trade. If it is filled, nothing for you to do. You get a notification via text and or email, trades in progress. It'll either be a win or a loss. This particular strategy is about an E. I, th- I think this one's actually 90. This one might be 95% wins on British pound, actually. I think British pound has about 90 something percent wins for this particular strategy. Um, Boom, goes, takes off. And it happens over and over again. Crossover, buy stop has to go above, buy stop, it retraced a little bit, but the stop's down here, takes off. After about 2 weeks, you make your money. Less than 2 weeks. Most of these swing trades take a few hours to about a week. So the money turnover is pretty quickly. So that's what I really like about the futures also. Your money's not tied up for weeks to months. But the main thing is people always not really sure how to make money, how money going to be made. They see losses, but they don't see a big picture. So a while back, I asked Becky to put together a spreadsheet that shows profit and losses over the last 5 or 6 years so people can understand how the numbers play out. Because if you don't understand how the numbers play out, you might see a bunch of losses and just bail out thinking things are not working. And you just quit doing it. Okay. And that's something new traders and even veteran traders don't fully comprehend is the big picture of what to expect. And when we're talking futures, we can determine what to expect and the numbers involved and have a plan. And that's why I really like futures. So I'm going to switch to the spreadsheet and go through those trades. Some of you have seen this, some of you have not. But if you haven't, it's very eye-opening when you understand the big picture and how the numbers work out. And then we look specifically this year. This year is a picture-perfect example of why you have to follow the plan and understand the big picture, or else you just freak out sometimes and say this isn't working. All right, so I'm going to change the share. So far, the Zoom's been working pretty good so far since that last glitch we had. So hopefully it keeps up with that. All right. So what I'm showing here is the valid trades that filled over the last several years. We only trade, like I said, euro, British pound, Swiss franc, Australian dollar. Also here we have the Dow, Russell. So all these are all our future trades. Now, these are the ones that filled and were either wins or losses. Not every trade, like if you put an entry price 10 ticks above, some trades may never get there, so it won't fill, gets canceled, move on. So let's take a look at this. What we did here so that people can understand, doesn't matter how big the account size is, it's about percent returns. So what we did is assume a 25 grand account and we're risking $1,000 per trade. That's 4% of the account. Don't go more than 4%. 2 to 4% is absolutely max, absolute max. So this is based on risking 4% of the account per trade, $1,000 out of $25,000 account. So if we have a loss, it's $1,000 loss. If we have a win, it's a percentage of 1,000. So you see 257 is a 25.7% return, 30 to 30% return, 50 to 50% return. We have different strategies and we have different um, profit levels depending what people choose to trade. So some people have choices, but we give them, okay, take this first target. It's a more conservative target, so it's going to be a higher win percentage, but a lower yield because it's a smaller target. So we have choices people make depending on their own personality and their own outlook. But bottom line is, this is like worst case scenarios, not best case. These are worst case scenarios we put here so people can understand the visual of the trading and how we make money. January 2019, we starting out the year with losses, a couple of wins, and then end with a couple of losses, and the month sucks. If you're someone who started trading the strategies, you're the new trainee, the new coaching client, you're going to be thinking this sucks because you're losing all your money. What are you paying for? And there's where I have to talk to people. It's like you got to remember that when I went over that big picture thing with the chart and graph and everything. keep trading, and you have to trust the process, trust the plan, trust the numbers. Okay. So the next month, we don't require a lot of trade. This is not day trading. If your goal is to sit in front of a computer for many hours a day, day trading, looking at things go up and down, this is not for you. This is our end game. This is the result of many years of doing that day trading and evolving to swing trading. Now, this is just minutes a day to generate income. So this is something you can add to stuff you're already doing or stuff you can do independently of everything else, and this can be it. But it's not time consuming. There might be some time up front just to learn it, but once you're in it, there's nothing to do during the day with this all daily chart stuff we do. The market closes at 2 p.m. Pacific time. The charts update between 2 and 3. We get our trades valid sometime in the afternoon and place your order sometime after the market opens at 3 p.m. sometime in the next few hours. Anytime between 3 p.m. Pacific and 9 p.m. Pacific are good times to get your orders placed. It's that casual and relaxed. It really is. So this first month sucked, but look at the next month. With just 4 trades, you made a bunch of your money back. This is just first target only. Remember that. This is worst case scenario. March, you're now positive. Let me explain to you real quick. I always write it up in things I send out. Every year, expect to have 2 to 3 losing months. That will be offset by 2 to 3 winning months. The other 6 to 8 months of the year will be your profits for the year. So keep that in mind. Okay, one month is offset by another month. This month is offset by this month. That done. Okay, next month, positive returns. This is percent return based on a 25 grand account. Next month, spectacular month, 17% return. These are just placing your trades as they become valid. You won't be in every single trade, but try to be in most. Okay, you try to be in most, and you're just booking profits every month. Not every month is profitable, but 2020 to 2019, good year. When the year was done, 73% return on account. This was a profit on a 25 grand account. If it was a 50 grand account, then this would be $36,000. If it was a $100,000 account, then it would be $72,000. If it was a 10 grand account, then it would be whatever percentage that is for a 10 grand account, $7,000. Okay? Doesn't matter the account size, it's percent return. And we can trade small with currency futures. 2020, COVID year, one of our best years ever trading everything, whether it was options or futures, best year ever for trading. Okay? January, good month. February, market's crashing. Good for us. This is when the market was being destroyed. One of our most profitable 2 months period ever, when the market was getting crushed. One of our most profitable 2 months period ever. Because we don't look at news. We take our sell signals and buy signals only. We don't care what we see in the news. This is all technical. And probabilities, and it doesn't matter. There are some technical strategies that fall apart in sideways markets. Not these, because we spend so much time on these, both back testing and forward testing, so that we know that even when the markets are choppy, if you look at the big picture over a couple of months, we're going to make money. There are some strategies where a few months will wipe out years of profits. If you are risking random amounts of money, you can't predict income. But if you keep your risk set, whether it's $1,000, $700, $1,200, keep your risk around that same level on every trade, then you can actually calculate how much you're going to make, how much you're going to lose, and make a plan for the year. And it tends to work out in your favor as long as you follow your own plan. Okay, 2020 ends up being, what, one losing month, something like that. And in 2020, more than doubled your money, or double the account size. If you want to double your account size, you don't gamble, you follow your plan. It will be what it will be. If your account is meant to be 107% return, which is more than doubling your account size, then it will be that. If it's meant to be a 10% return, it will be a 10. Follow your plan and your numbers will work out in your favor. Don't try to gamble and risk big amount. Well, I'm making this much with this one. I'm going to double and triple how much I'm going to risk. No, you risk the same amount on every trade and the numbers will work out for you. Discipline. 2021, back to the same routine. Follow your plan, follow your plan. You had a sketchy month here with a whole bunch of losses to finish the month out, but you had a whole bunch of wins, so it ends up being a break-even month, just 1% return, but positive when the year is all done. You more than double your account at a 4% account risk. Remember, if you're only risking 2% of account, then it would be you would be making about $15,000 on a 30 grand on a 25 grand account. About excuse me, 12 on a half of this. So 15 grand account, $15,000 on a 25 grand account. Um, so this is on based on a 4% account risk per trade, which is absolute high end. Don't go more than 4%. Okay. Here we have two back-to-back losing months similar to this here, which we'll look at. People who start, once again, I know people who started trading in this time frame and it sucked for them because they just have 2 months of losses. They just started my coaching program and they have nothing positive to show for it, but loss after loss after loss. They start making a few wins again, then loss after loss after loss, and it just is mentally taxing. And here is where I literally have to talk to people again about remember what we did with this chart, and we might have two losing months. Those two losing months can be back to back. This is exactly what this year looked like, by the way, which we'll see in a little bit. But you have to keep trading. Have to keep trading. The next month, you made back everything you lost the first 2 months, those previous 2 months, just by like that. 1 month offset two losing months, just by following the plan, taking your trades. The year goes on, the same type of thing. You take the whenever it's value, you take your trade, end the year 66% return. If you're risking 2% account, it's a 33% return. All right. Your risk is usually between 2 and 4% of account. So it depends your comfort level with the amount of risk you're taking, but 2 to 4%. So if you're risking 2% of account, it'd be a 33% return on your account in 1 year annual. I was talking to a relative recently, and I was talking about trading, and he was interested in trading, and his goal was to maybe make about a 5% annual return. And he thought that would be like really impressive and good to get a 5% annual return. I was like, we do that like a monthly. He's like, what? What do you mean monthly? No, monthly. Yeah. And he couldn't even comprehend that, but that's the benefit of trading futures and having a 50 to 1 leverage on available to us and following a plan. You don't have no plan with that much leverage. Good luck. You're going to be hit or miss. You gamble your money away. You're going to have big wins and with big losses, but no predictable income. All right, 2023, same type of thing every month. End of year, 70% return, 35% return if you're risking 2% of account. Last year, 2024, is just a routine, same strategies. Place your order, place your target, walk away. It'll either be a win or a loss. If I filled in 2 days, 58% return, that would be a 29% return if you're risking 2%, but it's risking 4%. And for this year so far, we had, like the previous year we looked at, 2022, February and March were losses, and they kind of sucked because no matter how long you've been trading, if you got a couple of losses, it's just not fun. So we had a couple of people who started this year, and it's both good and bad because it's good that it's bad to have losses, but it's good that they're working through this and knowing that you can get to the other side. Because you had first month was a great month in January with a 12% return on account. But then they end up giving it back with 2 months of losses. And then they started out April with a couple of losses. This even just look at this. Realistically, no matter what you trade, you will at some point in time will have 3 to 5 or 6 consecutive losses. It happens. That's normal trading. So you have to factor that into your risk management. How much are you risking per trade? So you can't be risking so much in one trade that is going to really hurt you. So you know you're controlling your percentage account and you know your drawdown, but you're also booking profits, booking profits, booking profits. End of the month came out break even, zero point 0.6 is still positive, and small break even loss, break even to a small loss in May, and a nice percent return in June on account. In just 4 trades, you have 7% return on account. It happens really fast. You make money really fast to offset losses. And given the fact that we've already had 3 losing months, statistically speaking, we are set for a whole bunch of winning months. Okay. So this second half of the year, we're really looking forward to, especially with futures. Do you have any questions on this on just the how we make money type of thing? I said there's a fine line between making money and losing money. And like I said, a big part of that is understanding the numbers and the expectations and being consistent and disciplined. Don't be scared off by a couple of losses, but you will be scared off if you don't understand the numbers. So whatever strategy you are trading, you have to understand what to expect short term and long term. No one month is not every month is going. If I always hear people say, "Well, I want to make so much money every month." You will not make every that much money every month. If you want to make that much money every month, you have to have a job and you get a paycheck every 1 or 2 weeks. That's how you make money every month. You can average a certain amount every month trading. That means if you want to average $2,000 1 month, you might make
Hello?
3,000, and 1 month you might make 1,000. You average 2,000. Yep.
Okay.
So that's how you average that much.
Okay.
So that's something that really that people always forget about when they say, "I'm going to make this much every month." It's not every month. Some months will be losses, so you have to factor that in. Don't quit your day job to go be a trader. Wait till you get to a point where you're consistently profitable, not making a bunch of mistakes, and you have a big enough account so that you can generate the income you want. I've had people who have $100,000 account and they were planning to make 120% return on that account every single year. That was their plan. So they quit their day job and then reality kicked in. No, it doesn't work like that. Um, you now you following the rules. Yes, you can make a 20 a anywhere from 10 to 20 to 40 to 50% return on your account every year. Yes, you can, but don't expect to be doubling, tripling, quadrupling your account. I've had people who thought they could do that because something I always ask people when I talk to them first time, if you have a 100 grand account, how much do you think you can make annually? And I've had people go from anywhere from 10% to 500%. And I have to get them back to reality check now. You're not going to quintuple your quintuple. You're not going to make 5 times your account every year. The people who do that either got lucky or they're not telling you about the losses. They can have big wins by gambling, risking big chunks of their account, and yes, they can do that, but they don't tell you about the losses. Also, they never tell you about the losses, how much they gave up to make that much money. All right, so we went over today the Ichimoku cross. It's pretty straightforward. For coaching clients, that's just one of the strategies we go through. We have a group of strategies that for going long, how to buy the bottom, how to buy when the market is trending, is moving higher, and how to buy when the market has an established trend. We have short strategies that show how to short market tops, how to get in short once the market is starting to trend down, and I'm going to be releasing sometime in the near future some more short strategies. So stay tuned for that. But long and short, how we make money is exactly how we went over. And you see the percentages, if you're risking 4% per trade, as long as you don't make every mistake you make can cost you 4% of the account. So that's why for the people I'm coaching, I try to review their trades each time they place a trade to make sure it's right. People will email me their trade parameters to make sure it's correct. And that's something I do with people, all the new people, because it's little mistakes can mess you up, especially the first time they're filling out order forms. It sometimes looks simple, but it is not that simple. And one little error, buying when you should be selling, putting in the wrong number of contracts, putting in the wrong contract, thinking you're trading a micro when you're trading a full size contract. Suddenly you're risking $10,000 rather than $1,000 because you forgot the symbol was you got the wrong symbol and didn't realize it. You put the full size symbol in rather than the micro symbol. Little things like that can mess you up. And when you do a mistake like that, it never works out in your favor. It always goes the wrong way. It never goes your way and makes you a bunch of money for some odd reason. It goes the other way. So anyway, do you have any questions on this so far? Or anything we've gone over or anything you want to look at? Okay. So I'm going to switch back to the charts, I mean to the handout. Let's see. Share, XP, and see future strategies. Okay, here we go. So this is a strategy we've gone over in the past. And so I'm not going to go over this one again today. We don't have time for that. But if you look at any of the last couple of recorded meetups that's on the website, link I sent for the YouTube videos, you will find a review of this strategy. It's one of the short strategies. It's one that's we've been using for a long time. So make sure you take a look at some of those past videos and it will go through some of this example. This one we use to find short trades is usually a market has rallied up to the upper Bollinger Band and we're looking for a buying opportunity. I mean, excuse me, a shorting opportunity. So the market goes up, comes down, retraces up, and then back down again. And we look for that sell signal. Same thing here. The market goes up, hits the upper Bollinger Band, comes down, up, and then back down again. And we look for that transition from up, down, up, and the next leg down. So that would be here. But like I said, that's in the video from the meetups, from the previous meetups, so that's on the YouTube page. And I'll go through this one in detail. For for those people who are developing this strategy on their own, I put in the valid trade date so you can go and double check to make sure what you've developed matches the trades that we showed on our listing. And for my coaching clients, we'll go through all of this stuff that's readily available for all the different strategies. So we make sure you understand all the strategies. And I send out an email every day. Every afternoon, I send an email out with all the trades we find valid. So you don't have to rely on doing this yourself. You're not in this by yourself. We have a Facebook group that you can work with other people with. If you want to contact other people for help and team up with them, we have some people who have teamed up on Facebook that help each other out each day. I send an email out every day, every weekday with the futures trade, so you don't have to worry about, am I doing this right? You compare what you found with what we found valid, and if you're going to trade it, I'll go over that with you. Make sure your account is set up correctly, handhold you if I need to, make sure your risk is correct so you don't have a lot of errors because errors just cost aggravation and money. And if you're interested in working with me on this, let me know before this Friday. And these are the discounts I'm giving on all the programs: 250 off the futures program, 250 off the options program. You can do both options and futures. I'll take 750 off total. And if you do an options program, I'll take by itself the full deal. I'll take 750 off the full options program. For everything I do is one-on-one. I don't do group sessions, big groups for coaching. What I found is everyone learns things differently, and I might have to say the same thing three different ways for someone to understand something. Things I think are simple, other people find complicated. Things I think are complicated, other people find simple. So since everyone's different, I really have to focus on how I say things. So to get the point across to certain people, how to trade certain things, how to recognize certain things on a chart. Although I think something is simple to visually, other people don't always see it that way. So I have to find more creative ways to help them visualize what to look for and a routine because if there's a lot of stuff here, what do you have to, what literally, what am I looking for? And once I see that, okay, now what? And that's this type of stuff I help people develop that routine to find what's valid and the strategy and the strategies and the trade management to make sure everything is they're all traded the same way pretty much. It's all the same basic trade management, just a matter of recognizing the potential the opportunities with the different setups and triggers. So, like I said, everything I do is one-on-one, and I try to review your trades with you monthly. Just let me know, and we'll pick a time, whether it's in person or on Zoom. I'll meet with you and go through what you've been doing, make sure everything looks good, and then just keep going. And you, on your end, I really need you to commit 6 months to this, 6 months of trading the strategies to see the profits and loss, to get through all the little mistakes like we saw with the 2 consecutive months of losses. That stuff happens, but you got to commit to trading through that. Trust the methodology, trust the strategy, trust me. And you get through those first few months, and when you get out the other side, you'll be like, wow, this stuff really works, and it does. But you have to get through those first few months, all the little bumps here and there in the market when they're trying to freak you out on the news. Got to get through all of that, and then the numbers work themselves out very nicely. And we've been doing it for so long now, we know. So everything you see us do for our strategies, yes, they've been back tested, but forward tested for many, many years. That's how we know everything works. We do everything with real money every day, every year. And so this is the stuff we're sharing with you. All right. And many people share their knowledge with me. So this is a handful of people that I learned from. And Becky, we travel literally all over the country and meet with these people. Daniel Gramza, he's the one we really learned um, stops um, and how to establish stop losses and targets, how to establish our first target, stop loss, and that type of stuff. He's the one we learned this from, and it took a lot of work to get to that point, but we got to that point. Okay, John Carter, Hubert Centers. I mean, they're my foundation in futures. Seriously, you see the squeeze on every chart we have. Foundational futures was from John and Hubert. John Bollinger, the Bollinger Band man himself. David Elliott, Price Headley, Woody from Woody CCI, Oliver Velez, John Persons, Hubert, and Jake Bernstein. Is very much Jake Bernstein. Um, he moved out here in California in 2009. I was in his group and eventually took over his group on Meetup. Linda Rashke, technical analysis genius. Steve Nissan, candlestick dude. I mean, and then Steve Bigelow, also big on candlesticks, and WD Gann. I spent a lot of time learning Gann analysis, and take a lot of that knowledge and include that in everything we do. That general concept of Gann, time and price analysis. Everything you see us do involves time and price. And Ron Ionary, options dude that just helped me a lot understand some more complex strategies along the way also. But those are some of the people we learned from, and a lot of the stuff we learned from them is incorporated as part of what we do to get to this end game. And when I say the word end game, look in a couple of months. I've been putting these strategies also on on Collective. That's the site online that you can follow trades and trade along and subscribe to that. So stay tuned. I've got about 8 months worth of 7 months worth of trades on there now. So after about a year's worth of trades, I'll make it. We'll do a meetup on it and show you that site where I have all that stuff online that you can follow also. All right. So let me know by Friday if you want to work with me on the coaching. And like I said, I'll meet with you one-on-one, whether it's in person or on Zoom. Either one's fine. I do like to meet with people in person if possible. All right. unless we have any questions, we'll probably have our next options meetup in maybe either 2 weeks or 4 weeks. It would either be the first weekend of August or the third weekend of August on Sunday. Either one of those two. I'm not sure which one yet. But unless, because the big time is coming up end of the year, so we really want to get into the end of year seasonal patterns to be ready for that, especially the end of year seasonal patterns. We'll always look for pullbacks in August. Don't know how deep it'll be, but it's usually a pullback in the market in August. So look for that also. So we want to talk about that early in August if possible, or no later than the third week of August to get ready for the end of the year to start prepping. All right, so if you want to work with me on futures, please contact me before the week is over for the um, discounts. And unless anyone has any questions, I'll see you all in a couple of weeks.